Hello guys, welcome back to the channel. So I want to show you something quite interesting today. I want to show you basically how I am one of the best traders on social media. And that's not me being arrogant, I have the data to back it up, and I really doubt any of these other gurus that you follow also have this. I know that there's a couple like Tory Trades and Trader Nick as well, obviously do. But you know, on average, I'm outperforming the smart money, I'm outperforming the indexes, I'm outperforming almost everyone on average. Now, this is obviously a fresh MyFX book, so feel free to take this with a grain of salt, but you know, it's better than nothing, it's better than what most people have to offer. You know, full transparency here, you can see the capital. This is obviously a public account. This isn't my main personal account, but it's one I use to obviously track trades and show to you guys. So you can see here it's currently up 6.43%. You can see on the previous months, in September we made 2.35. In October was actually a very bad month. We managed to climb out of some drawdown, ending the month on a positive 1.69%. And November, you can see at the top of my screen here, it's currently the 4th and we're already up 2.25%. So how do we do this? You know, I've also got some stats here if you guys are interested. You can see this a phase 1 funded account, so I'm almost passed on this as well. Down here you can see the stats. We've got 88% wins on the long trades and 83% wins on short trades. So overall, you know, that should be enough stats just to at least make you listen. So what is it I actually want to show you? Well, it's how do I do this? How do I do what I do? How am I, you know, I'm going to say it again. How am I one of the best traders on social media? And again, you know, take that with a grain of salt. It's more just a catchy thing to say. Well, it's because I trade with data. Now, this is a big hole that a lot of retail traders miss. It's a huge thing that isn't capitalized on by the mass market of retail. And it's essentially going beyond the candlestick. So for example, why did oil gap down here? Sure, it gapped, but why? Why did that happen? How likely is it that this is going to fill? We've had another gap here. Why was this happening? You know, how do we understand all these things? And we have data releases. So for example, we have NFP, we have unemployment, we have GDP, we have Fed rate cuts, Bank of England rate cuts, rate hikes. How do we put all this together? Well, I'll be honest with you, you don't need to be a genius. I'm definitely not a genius. In fact, I'm actually pretty dumb, but we can keep that between me and you. Well, you can use aggregate services, essentially is what they are. So if we look here, this is called the Edge Finder. If you're a part of Elite Traders, so my Signal and Education group, you can get a link in the Discord, by the way. If you are a part of that, you'll see me using this all the time with other softwares and things, but this is one of the core parts of how we run. So what we do is use the software. Basically, what we don't need to do is go to a website like Fred and go, okay, well, this was unemployment here, this is unemployment now, and we could write it all down and, you know, mess around and waste hours and hours of time. We can go into this software and say, okay, retail positioning. So, you know, what is the retail market doing? Well, they are currently selling euro yen. We've got interest rates actually aren't really affecting this market. Unemployment rate is working against us in this market. So we can get an overview, but I want to show you a little bit more about this and how we can really get our nails into the dirt and how we can really get a trade out of this. So first of all, we want to know, what are the big players doing? You know, when we talk about trading, you and I, we aren't moving markets. Let's just be honest. I think everyone can agree with that. Our 1 lot, 5 lot, even 10 lot trades don't have any effect whatsoever. So the people that are moving the candlesticks, people that are driving these trends, what are they actually doing? What are they buying and selling? Well, we can look at this. So this is called the COT report. Now this comes out by the CFTC it's collected every Tuesday, and I think it's released to the public every Thursday. So I think, by the way, don't quote me on that one. That's a piece of information I'm not 100% sure on. It's a lagging indicator, but it's still very useful because this doesn't tend to change on a weekly basis drastically. It's more, we see increasing increments over weeks and decreasing over weeks. It's not a case of they'll buy a massive amount of gold and then suddenly sell a massive amount of gold and we're left holding the bag. It doesn't work like that. So it's still a very strong thing to use. So for example, on the yen, I think we all, you know, if you're a trader in the markets, you should know that the yen has been in a very difficult spot recently. We did see an uptick and now we're starting to see it come down. And what's something we can use to back that up? Well, smart money has decreased their short contracts, the long contracts. So we can see here, they have reduced, if we look at this column here, long contracts, short contracts. You don't need to really worry about all the other columns right now. This is just sort of a brief explainer video. So if we look at the long contracts, they've got negative 14,439. So they've reduced their long contracts. Whereas short contracts have increased by 23,149. So we can see the huge disparity there. So we can now say, okay, well, if the people that we want to follow, the people that we are sort of, riding the breadcrumbs off, if you will, they are selling the yen. So then we can say, okay, if they're selling the yen, what's going on with something else? Let's have a look at the US dollar. Now, right now, we've headed into elections. We've got Fed rate decisions coming up this week. So obviously, this isn't a real trend I'm looking at, but this is an example of how I would approach it. So if we look at the US dollar, long contracts have increased by 1,700. Short contracts have also increased by 900. So you might be sat there thinking, oh, well, isn't that unclear because they're buying and selling? Well, not necessarily. Because if we look overall in this long percentage, it's 52% long. Their net positions are also overly long here at 1,600. So we've got that outweighing the short positions. So we can say, okay, well, dollar yen might not be a necessarily bad idea to go long on. So we can go here and have a look at our top setups. Now, dollar yen isn't here. Well, why is that? Well, it's because this top setups reads what the most recent data is and applies it to that market. It says, okay, it's almost like a binary system in a way. It's like, okay, well, if this equals this or this equals that, then it could be 0, it could be 1, and it sort of plays into account and then coming up with this score. So for example, retail sentiment is good for this market. So it gets a score of +1 and it contributes this overall score of 7. So that's why we're not seeing dollar yen on this top setup right now. So if we have a look at the overall score here, you can see dollar yen here has actually got a neutral reading of 4. So it needs to have a reading of at least 5 here to have a bullish reading. So you can see it does still have a positive score, although it's not overwhelmingly positive. So if we go here and actually have a look at what is the top setup, well, it's EuroCAD. So if we click on EuroCAD, so we can see here on the EuroCAD reading, we've got a lot of different factors that can help us navigate this market and really get an idea. So let's break this down and have a look what's actually going on. This is a lot of data, especially if you've never seen something like this. So what we've got, essentially, let's start from the top. We've got the market sentiment. So we've got here, which is COT. We've just gone over what the COT is. And obviously it's applied here because we've clicked on this market. It's given us an overview of this specific market. We can see we have got a COT score of 0. Now that's because COT isn't really doing anything. So if we look at their weekly change, it's -2 on both of the markets. So it doesn't really mean too much in this situation. So we can kind of just slash that out. COT is irrelevant in this case. This is the way I trade, by the way. Yours might be completely different. But if COT is 0, it essentially is meaningless. Now, retail positioning is what's actually very interesting here. So retail is 15% long, 85% short. Now, what does retail do? Well, they lose money, essentially. We all are aware of the stats of, I think it's 90 to 95% of retail traders lose their money in the long term or over 6 months or something crazy like that. So if we can counter trade them, then overall, if in theory anyway, if we counter traded them again and again and again and again, we should make money. Now again, that's just a theory. It doesn't really work like that. So let's move on into seasonality. So this is taking the 10-year average performance of EuroCAD. We can see over the past 10 years, during the period that we're in, we can expect EuroCAD to rise by 0.14%. Then we've got the unemployment data here. So the euro, we can see unemployment is 0.1 and the Canadian dollar is 0.2. So obviously if we have an employment change, then that's good. But we can see the change here is still not overly, overwhelming to either side here. Now, unemployment, this is quite a good factor here. So what do we want to see of unemployment? Well, ideally, we want to see lower unemployment. So if we look at the euro, we've got 6.3 on unemployment. The Canadian dollar's got 6.5. So this is actually weighing in favor of the euro. So you can see our unemployment rate here that we can see on this list is a -1. That's counting against this trade. It's not a positive factor. So that's something we can take into account. So let's say we've got the next data release. We can say, okay, well, next data release we've got coming for the euro is unemployment. Let's watch that number. Let's see if the unemployment for the euro actually ticks up or down. And then we can sort of use that and build onto this trade even further. So now we are on the EuroCAD H4 timeframe. So we can see, we've had the bullish reading. We've just gone over that. Now, what do we have on the chart? Well, we've had a huge bullish run here, but just because we've already had a bullish move, it doesn't mean that we've missed it. It doesn't necessarily mean we're going to have a bullish reading on the edge finder and then a bullish move in the market, and that's it, it's done. It doesn't work like that. So what we can do is now say, okay, we've had this really nice bullish run. We've got our moving averages that have crossed. So this is now bullish. We've got the 200 EMA underneath this 50 EMA. That's a great setup for me. So all I'm going to do is look for this 50% retracement. And bear in mind, this is the way I trade. You can adapt it to however you trade. All this does is give us a really, really strong sentiment for this market. So rather than having to flick for each market and say, oh, what's the data on this one? What's the data there? Should I buy? Should I sell? What do I do here? It's a case of, okay, we've got a list of what we already want to be buying and selling. All we then have to do is go to the charts and say, okay, support here, resistance there, order block, FVG, however you trade is fine. So we can see our 50% level line here lines up really well with this previous high. So all I'm looking for really is this break, which we've already had, a retest on this 50% level, and then a continuation to the upside. So I'll mark out my position here. So we've got our take profit at the negative 618 level, stop loss just below our 0.618 down here, just to allow some room for this market to breathe. And now we can see we've got a great trade. Now, what also backs this up? Well, we've got this really strong level of resistance here. So just by sort of natural market moves, going off the sort of, laws of support and resistance, we should see some sort of pullback from here. Now, if we don't, that's completely fine. We can look for the same thing. So if we break above this resistance, we look for the retest and the continuation, and then we can just enter at a slightly higher price. So it's very, very simple stuff. Now, how long did that actually take us to find that trade? Well, all we did was look at our top setups. We put this on neutral. You will sometimes see a bearish reading here as well, but obviously there's no bearish setups at the moment, so there is no box here for the bearish trades. So all we did was get rid of neutral because we don't want to trade markets that don't have enough economic factors to sway the market either way. It's just not good enough. So we filter it by bullish. We found EuroCAD. We had a look at the data. We can see seasonality is great. We've got retail sentiment that's great. Unemployment isn't the best, but unemployment numbers can change, and we can wait for the next unemployment data release. And then all we did was go to the charts, draw up 2 boxes and a fib. And we've got our trade idea done. All we now need to do is just wait for an entry. Now, that was kind of a basic overview on how we can find a trade, but there's so much more going on behind the scenes with this. So again, we can have a look at retail sentiment. We can get a more broad overview here. So we can see oil. Well, retail positioning is 86% long on oil. Now, oil, like I said, has had those market gaps. So maybe we want to look to short oil. So copper, again, 83%, almost 84% is long on copper. So we can get this idea and we can sort of fade these trades. Essentially, we can start saying, okay, well, this is a good factor. What about COT? What about unemployment? What about this and that? And we can start putting the jigsaw pieces together. Now, this is seasonality. Again, we covered seasonality on that EuroCAD example. So we can say, okay, Bitcoin this week historically is 4.59% bullish. So if we want to isolate a trade here, let's say we don't want all of these assets here, we can just highlight dollar yen, for example, and we can click only dollar yen. That's all we want to see. So we can see this week 0.61, and then this month it's actually down 1.19%. This can give us a really good confluence into this market. So again, let's say EuroCAD, we're looking to buy this market. Seasonality is bullish. We've got all these things going on. We can put these pieces together and build the trade. Now, we've got so much more here as well. We've got GDP. So if we want to look at the GDP growth of the US, we can see here we've got these orange dots here which represent the forecast. If the bar is red, it's missed. So you can see here it was 2.8, it was expected at 3, so we get this red bar. White bar here came out as expected. You can see our orange dot was at 3%, the bar is at 3%, and we can see, obviously blue means it beat the forecast. So we can, again, if you want to have much more control over your trades, you don't want to just follow top setups, you want to have a real core understanding of what's actually going on behind the data, you can do that. You're not limited here at all. Moving on, you can see services PMI, manufacturing PMI, retail sales. And what is a great example, actually? We can have a look at what caused the dollar bearishness recently. When we saw the unwind of carry trades, 50 basis point cut, we can have a look. That was largely driven by a really weak labor market. So if we look here, we can see the NFP, 206K, down from 272K, down to 114. And we had a slight pickup recently here, and now we're back down at 12K. Same thing here with unemployment. We saw unemployment rising. So you can start to catch these trends after obviously depends on the way you trade, but for example, if you saw these first 3 unemployments come out and start this upwards trend, we saw NFP coming out lower, we can start saying, okay, this labor market is getting weak, let's go short on the dollar. Now again, you can see this trend is actually coming to an end. Now we're seeing a decrease in unemployment. We've got job openings here on a huge decrease, so we can see that this is really not good. So again, you could have caught this downtrend on the labor market quite easily if you just look at the data. It doesn't stop there. We've also got interest rate data. So you can see here the US Treasury yield curve. So we can see, obviously, if you trade yield curves, you understand it. I'm not going to go into that in this video. It's quite a broad topic, but you can definitely track here what is the Treasury yield curve doing. Obviously, you can sort of gauge this due to recessions and hikes and cuts and things. But again, it's a completely separate topic. I'll make a video on that if people want. We've got inflation data here, CPI, obviously. So you can see, again, we've had a decrease down here. You can use this to start measuring rate hikes, rate cuts. You can say, okay, inflation's doing this. I expect this from the Fed, or I expect this from the dollar. And you can really start gauging these markets and what's going on. Once you understand this data, it's very, very simple. You don't have to really learn too much. You can just look at these bars and start understanding what's going on. It's very, very simple stuff. Now, these are positions I took on the pound dollar. You can see I made quite good money here short term. I made 2%, then I made a 2.66% gain on pound dollar. This was within 2 days, or 2 trading days. So how did I get this? Well, let's have a look here. So this is the historical score for pound dollar. So if we look, these trades started here on the 18th of October. So if we look, what was going on pound dollar during the 18th of October? Well, we can see we had a score of -2, and this then decreased to 1 and then increased to -4. So we obviously had an overall bearish reading on pound dollar. So I used that with obviously my own strategy and my own due diligence to then say, okay, well, it's reading bearish here. What else can I layer onto this? And I went and did, bank reports and technicals and, what the way I trade, applied it and got these trades. Now, obviously the hedge finder pointed these trades out for me. So it was very, very simple. Now, if this software sounds good to you, it's currently on sale for 40% due to Black Friday. But, and the big but here is it's actually on sale for 45% if you use my discount code, which is ELITE, just one word. This discount is only available to you guys, obviously my audience, with my discount code, so you guys can go and feel free to use it. I'll be 100% honest, I am an affiliate. I do make money from you using that code, but everything I do on this YouTube channel is completely free. I'm not even monetized. So it would help me a lot. Please like, subscribe. You can also join my personal Discord, follow my trades and education in the description. I will see you later. Thank you for watching.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.